What is up, tycoons? What's up, traders? Super excited for today's video. We are going to update the free trading course playlist, and today's video is going to be on the Fibonacci retracements, how to use them, as well as go over how you can get bullish or bearish price targets after using those as well. Now, we're just going to go ahead and jump straight into the video. It's going to be nice, short, and sweet, and it's going to be very informative. So make sure to smash that like button, subscribe to the channel if you guys are new. And these right here are your Fibonacci retracement levels, okay? You have the 0.236, 0.382, 0.5, 0.618, and 0.786. Now, if you've ever watched any of my technical analysis videos and updates that I do on the stock market, commodities, crypto, whatever it is, you'll see that I'm using the Fibonacci levels very frequently, and I go over them in almost all of my videos. Now, the most common retracement levels are going to be these three in particular: the 61.8, the 50%, and the 38.2% levels. So me personally, to try and remove some of the clutter from my screen, these are the levels that I look at, right? And these are the ones that I'm paying attention to personally. And the reason being is just because these are the three most common and well-respected retracement levels. As I just showed you guys earlier, there are some others, but in particular, I like to just pay attention to these three, so that way I can declutter my screen and remain more focused on some of the more common and more respected levels. So remember that the 38.2, 50%, and 61.8% levels. Now, those are the percentage wise, and these are the decimals, right? So if you just move the decimals over 2 points, that's how you get the percentage, right? So 0.382, 0.5, 0.618. Now, on TradingView, which is a free trading platform that I highly recommend, especially for beginners, to get to the Fibonacci retracement tool, you simply click right here. Okay, this is the nice Fibonacci tool, completely free to use. They do have a paid plan, but you can definitely just start off with the free plan. Now, you may be wondering, how do I know where to connect my Fibonacci levels? Well, if you're looking for Fibonacci retracement levels of support, you're going to take your tool right here, your Fibonacci tool, and you're going to connect it to the swing low, right? And so I go by the wicks. All right. If you're not familiar with candlesticks and wicks, this is the body of the candle right here. And then this is the wick itself. This is the top of the wick. So you connect your swing low to your swing high, and now you have this move up. And then you're looking for the major retracement levels. And you see here, I have the 38.2, the 50%, and the 61.8% level. All right. And we come up, we pull back, we find support at our 50% level, and then we continue up higher. Now, this is Tesla stock right here. This works in the stock market. This works in the cryptocurrency market. This even works in forex. So it's not just secluded just to crypto or just to stocks or just to forex. The Fibonacci's is a mathematical formula that exists all throughout nature. Okay, now if you notice, I have this A, B, C here, and I'll actually teach you how you can use the fibs as well to get bullish or bearish price targets. Okay, and so what you want to do is if you take a look here, we have it. All right, and so this would be basically in a downtrend, right? So we went over for support. After the move up, you find the support, but you can also do this to find resistance. So if you take a look here, we have our swing high, and then we have our swing low right here. So now we're going to connect our swing high to our swing low and figure out the major retracement levels of resistance, right? And you see we move down, we retrace up to the 61.8, and then we continue that trend downwards. And markets tend to move in 3-wave and 5-wave structures. So that's why you see these ABCs on the charts here, right? So we got a move down, that was our A wave down. Then we got a B wave retracement, and then we got a continuation of that trend in our C wave. So the fibs are really useful for spotting trend continuation because nothing moves in a straight line down or in a straight line up. Rather, you would get a move down, retracement, continuation of the trend, or a move up, retracement, continuation of that trend. And we can see that we got trend continuation here to the downside, and we hit our bearish price targets. And afterwards, we got a bullish move, retracement, and continuation of the trend, and hit the bullish price targets. So it works very, very well. And you can spot potential reversals if you move up, you retrace, and you start to consolidate and break below the 61.8% level here, and you flip that from support to resistance. That's a good sign that you could be attempting a reversal to retest some of your previous lows. All right, that would be a downside reversal after an upside move. Now, for an upside reversal after a downside move, you would look here and you look for consolidation and then a break above that 61.8% level, and you flip that to support from resistance. We could have seen an upside reversal here and possibly a new uptrend starting with higher highs. Now, I mentioned how to get the bullish price targets. And so what you want to do is you want to actually go over here and hit the trend-based fib extension. Okay, so the Fibonacci extension tool is what you're going to use to get your bullish or bearish price targets. And so it works very similar to the Fibonacci's. So initially here on this move up that we have a swing low, then we have a swing high, right? And so that gives us our major Fibonacci retracement levels, right? And so you can see we bounce here off the 50%, continue up and hit our wave C targets. Now to get our bullish price targets is using this tool right here. And so what you do is you connect your swing low to your swing high, but there's actually 3 connection points. So after you get your swing low and high, you're going to connect it to the bottom, right? To the bottom of this retracement. So you would connect this zone, and this zone right here. These 3 areas is going to be the basis for your trend-based Fibonacci extension tool. And once you do that, you want to look at the 786, the 1, because typically your C wave is going to be the 1.0 extension of your wave A and B, right? So we have our A and B here. And if we were to get a C wave in a perfect world scenario, it's going to come up here to the 1.0 extension. Now, I like to use a couple other extensions as well. I like to use the 0.786 and the 1.272. All right. So I have 3 main retracement levels that I use and 3 main extension levels that I use when it comes to the fibs. So, you know, that pretty much just wraps up the video for you guys. As I mentioned, you know, it works to the upside and to the downside. So, you know, in this case right here, if we slide back to the previous slide, what we can see was we did hit our C wave of the A and B extension right here after this retracement. And you see I had the 786, the 1.0, and the 1.272. And we came down to that 1.272 before finding our bottom. All right. And then it also works to the upside where now we have a new swing low. We connect that to our swing high, and then we connect that to the bottom here, okay, of this retracement. And it gives us our 3, Fibonacci extension price targets of the 786, which we hit, and then the 1.0 and the 1.272. Now, remember, there are other retracement levels that you guys can use. Just because I like to focus on these 3 in particular does not mean that you have to. But the Fibonacci is a really great way to help you guys out in finding trend continuation and potentially spotting trend reversals as well. So I highly recommend using it. And hopefully you enjoyed this video. It was nice, short, and sweet to the point. So smash that like button, subscribe to the channel if you guys are new, and I'm out.